Good morning, gentlemen. My screen is not available here.
Yeah, we can see your stuff. Good afternoon.
Okay. Good afternoon, and warm welcome to all those who have joined in, those who are watching, analysts, all our representatives of shareholders who have joined. A warm welcome to all of you. And here we are again with our team. Our team is very well known. No changes have taken place in the last 12 months or in the last 15 years probably. And we begin with a brief introduction to the company. For those who are not too familiar, we are licensed by the Central Bank of Oman. We commenced business in 1997 after we acquired the hire purchase and leasing auto finance business from Bank Muscat. Then our initial capital was 3 million. 60% was contributed by the founder members, and the balance was offered through IPO. Issue was subscribed 43 times, and now we have a net worth of about 70 million. It's been a long and a faithful and interesting and productive journey. I'll take you through now to the members of our board of directors. We have Sheikh Khalid Said Salim Al-Wahibi as a chairman. He's the longest standing chairman. He represents the Asrim Group. He's an independent director. The group also has the shareholding. We have a very respected banker and a very experienced Sheikh Khalid Ahmed Al-Mashni, who's also the chairman of Bank Muscat. And he has been also on the board for more than 2 decades, bringing his valuable experience in the industry. Then we have Sheikh Zaki Hassan Ehsan Al-Nasib, who's also the chairman of the executive committee, an experienced banker. He is also on the board of several other public companies. This year we have Mr. Nabil Ahmed Zahran Al-Mehruki, representing the Social Protection Fund. So Nabil is also on the board of other banks and other institutions. He brings immense amount of experience and knowledge to the board. We have Mr. Ibrahim Said Salim, who's he heads his family business, Asrin Enterprises, and has been on the board for more than 2 decades. Sheikh Tariq Salim Mustail Al-Mashni, also on the board for more than 2 decades. He heads his family business. He's also on the board of Bank Dhofar. We have Mr. Shikar Bipin Dharamsi, who has been again on the board for more than 2 decades. We have Mr. Imad Salim Nasir Al-Salmi. This is his second tenure. And we have this year who have joined the young, very well qualified Sheikh Awad Salim Mustail Al-Mashni, who brings again his passion and energy and new thinking to the board. Now, in terms of our shareholders, as you see, the large institutional shareholders amount to 67%. We have disclosed the breakup in our report in the December 2024 report. Other shareholders amount to about 33%. We have a strong management base, and we are very proud that what you see on the table here is experience of more than probably 90 to 100 years. All of the management team has been from the very earliest period. And as you all know, I'm Aftab Patel. I have been the CEO of this company since inception. And I have a very, very able team. Mr. Salim Awadi, who's joined online, who's our deputy CEO. And then you have, we can focus the camera a little bit. We have Lata Ramakrishnan,
Hello, everyone.
who is our General Manager at Risk, who's been with the company again for more than 2 decades. We have Samia Al-Hasni, a very passionate manager who heads the Human Resources Department of the company. And then Mr. Chandrasekhar,
Hi.
our Chief Manager Finance, CFO of the Treasury. Mr. Ram,
Hi.
the head of the retail. Mr. Viju, well-known person in the industry circles, head of the corporate. And we also have Mr. Manish, who heads the IT department, and Mr. Chandrasekhar, who is the secretary to the board. Gentlemen, this is a short introduction to the management team. We'll now take you towards very briefly so that we have a lot of time for the question and answer session. Our product segmentation. Basically, we have a corporate, what we call as a corporate credit, and it has working capital loans, asset management, asset loans, bill discounting, debt factoring, project finance, bridge loans, construction loans to warehouses and factories. Basically, on the large corporates, we deal with the prime and prime plus, which is large family businesses and listed companies. We also have a substantial number of customers who are large to medium SMEs. We support the SMEs in a very big, large manner. We have helped SMEs grow both through supporting their financial needs as well as advising them on their business plan, cash flows, etc. On the retail side, gentlemen, we do basically the car loans, equipments, both including some taxis, etc. This product is basically directed towards the salaried individuals, self-employed individuals, and much smaller, small and medium enterprises. We also have consumer loans, which are basically, we brand them as lifestyle. These loans are for acquiring the consumer durable goods, both the black and white goods. And this is a very popular product. Now, coming back to why Omaniya. The next slide, please. Why Omaniya? Now, from the perspective of our stakeholders, we are grateful that our stakeholders, especially the shareholders, have stayed with us. A majority of our shareholders have been those who have been with the very inception of the company. And the reason for that is, as we see, we continue to perform consistently and significantly in line or above the market. Yes, we have not, we believe in sustainability. We believe in consistency and delivering results year after year and not one big growth and then a sudden fall. We have been fortunate because thanks to the, we have the meeting of minds with the management as well as our board and shareholders. And therefore, we're all together in it. We ensure that we lend only to prime and prime plus customers, or we do also much better credit assessment so that we keep our non-performing loans lower. We have the highest asset quality. We have the highest provision cover. We have the highest amount of liquidity. We have paid the highest amount of cumulative dividend among all our peers. And we continue to pay highest, so the second highest dividend in the banking and the non-banking space. This is the history of the dividend paid since inception. That is our first financial year was 1998. Starting with 1998 to 2024 December, we have paid a total dividend of 505.8, or say 506%. We are very humbled and at the same time very proud of this achievement. And we would like to assure our stakeholders that the company will continue on this well-established policies, procedures, and the vision that the board has set for us, and we'll continue to work on that vision. And I'm so glad to report to you that even in the difficult COVID year, Omaniya paid a cash dividend to its shareholders. Here on the fiscal policy and the fiscal health, we have a presentation which is quite clear here, and we don't want to. I mean, these figures are in the public domain. You've seen that there was a marginal fall in the revenue compared to first quarter of 24 and 25, as a result of which, after a gap of 3 or 4 years, we had a marginal deficit of 136 million. Having said that, I think we expect the year to end for the better, and hopefully there will be some marginal surplus budget at the year. Now,
Same right.
yes. So we have this here, the little bit details for you gentlemen. And if anybody is interested, we'll circulate this to the. We have seen that the uncertainties, a bit of uncertainty, the geopolitical situation continues to be challenging. We saw just a couple of months, I mean, the region was going through a difficult phase with the disturbances around the closure of the airspace for a few days here and there. And therefore, I think this, which is much better stabilized now, but the uncertainties on the exports to United States continues with the tariff being here. Fortunately, Oman is not going to be impacted in any significant way by those trade barriers that have been set up, but there could be an indirect impact, because if it affects the GDP of the other countries surrounding us, it could impact the tourism, it could for Oman, and indirectly it could also impact the prices, etc. But I think the direct impact on Oman, fortunately, with the free trade agreement in place, looks to be buoyant. So we are confident about the economy. We are also confident that the GDP growth will be there. There will be a rebound in the oil production, and we don't see any significant volatility in the fossil fuels arena for the remaining part of the year. Now, 2000 will take you briefly to the performance of Omaniya from 2020 to 2024. Now, as you've seen here, 2020 was the COVID year. So we did see a very sharp decline in the profit because obviously we created much higher provision. There was impact on the new businesses, impact on the trade, business closures very high. But we were still fortunate that we made a profit and we declared a dividend, and our asset size did fall. And the economy went through a difficult period from about 2015 to 2016 onwards. We saw the bond yields going up, the prices rising, the budget deficit was significantly higher, and our borrowing costs also went up. But since then, I think the economy has done reasonably well. The fiscal health has been managed extremely well by the government of Oman. The Central Bank of Oman has set in some very, very proactive and policies which help not only growth, but at the same time keeping the credit quality and the as well as keeping the fiscal performance on track. So I think we are very fortunate in that aspect. You see the dividend that we declared. Of course, 2020 was a COVID year, and from 24 We have gone back to 12%, 12 quarter, 13, and last year was 14%. We have the income statement has already been published in the MSM and also in the newspapers. June 24, yes, we have seen some decline in the gross income. That was basically because of the lower rates of interest and some large corporate loans that got paid. However, we're happy to report that we showed a marginal growth in the profit after tax, and the net profit was about 2% higher than the previous quarter of the previous H1 of the 2024. On the balance sheet side, gentlemen, we are maintaining our deposit base and of about 85 million RO, which continue to hold the deposits. These deposits, we have been able to leverage ourselves very well. Obviously, they are a great asset and they also produce certain revenue. So we are there. Our assets have grown to about 120 million. The gross assets are 135 million, and the total balance sheet size is about 209 million Omani riyals. 209 for 24 and 206 for 25. There's no significant change in the liabilities, excepting that the borrowings are lower by about 5 million. And you can see the non-convertible redeemable bonus bond, which has gone up as a result of what we had issued as dividend, part of the dividend in the year 2025, which was the dividend for 2024. And the interest is being serviced and they will be redeemed as per the terms of the issue on maturity. Our total, no significant change in the equity side. We see a 16 retained earnings at 16 million, and the total equity without any revaluation reserves at 65 million against a capital of 31.5, giving us almost 2.2 as our book value. This is probably one of the highest book values in the industry. Here, there are some ratios that we are presenting to you here. Our yield, gross yield on the assets is 7.56. That's basically, again, because of the kind and quality of business that we source and focus on. NPL as a percentage of assets are 3.55%. Our total NPL is 3.5%. And the non-performing loan coverage as a provision as a coverage currently in June 25 stands at 433.89%. Now, on this so coming back to the prognosis, what we believe growing in line with the GDP or higher without compromising the quality of the assets. We are focused on maintaining the dividend payout to the shareholders, who are the major stakeholders. We are focused on maintaining our liquidity. We are focused on maintaining our provisioning cover, and we are focused on maintaining the quality of the book. Now, Obviously, our growth is not as high as of some of our peers in the industry, but then the proof of pudding is in eating. We continue to pay the second highest dividend in the sphere. So merely increasing the book, we don't believe that is the way to go forward. We'll continue to work with our objectives. As I clearly said, the objectives are making sure that every single stakeholder it gets its due share, gets its due reward, which is the shareholders in terms of dividend, the shareholders again in terms of quality of book, provisioning level, the liquidity, so on and so forth. I think all these are the parameters that will be governed by. We believe that we are well positioned in 2025 to maintain the consistency in our earnings and consistency in the dividend payment. So, gentlemen, I think we have kept a lot of time here to question and answer session. I would request, gentlemen, anybody who's asking the question, just to announce his name and the organization that he's representing, and please go ahead with asking your question. Thank you very much. Yes.
Hi. Good afternoon, Mr. Aftab and team. Thank you for the presentation. You mentioned that you deals with the prime and prime plus customers only, and at the same time, what we are seeing is there's a stagnation on your book. So could you please tell us, what's the kind of growth, asset growth that you're seeing from the segment that you are catering to?
See, what we define ourselves is that what our philosophy is that what you call the staying within the box. Now, when I say staying within the box defines what is our credit strategy. What is the kind of credit that is acceptable to us? And whatever is available, we'll take it because there is no shortage of liquidity with us. Whether it is 5 million or 50 million, we'll take it. Now, having said that, Joyce, as I have said earlier and I've said in my presentation, what do we want to ensure? We want to ensure that the shareholders are adequately rewarded. Now, that is one of the prime concerns. Merely growth, and if you are not able to pay out the dividend, does not make any sense. Growth for the sake of growth has no meaning, right? Now, we do see some growth coming in from the other players, but has that growth translated into rewards for the shareholders? Has it translated into better quality? Has it translated into higher provisions, higher liquidity? No. For example, even some of the instruments that are and the interest that is paid by some of our peers on their borrowings, we are not sometimes even able to lend at that rates. You're aware that we are the only player who participates in the what you call the syndication market. We do syndication with all the major banks. We have done in the past with Bank Muscat, Bank Sohar, National Bank of Oman. We continue to focus on these areas, right? So if we are able to get a growth of between 8 to 10% this year, that's what our projections are, and that's what where we want to live with.
Yeah, thank you. I got the idea that you're trying to convey that rewarding the shareholders, but rewarding the shareholders can come from two ways. One, of course, is the dividend, but at the same time, there is a capital appreciation for their investments, which will result in wealth creation, right? But at the same time, when we look at Omaniya Financial Services share price performance, we're seeing the stock is down 23% this year. Then the dividend yield is only 10%, hardly 10%. So, there is a wealth distraction that has happened primarily because, maybe the market is not appreciating your view
You
that,
see,
you are looking at.
okay, I got a point, Mr. Joyce. The thing is, market is not necessarily a direct relationship between the performance of the company and the function. The market functions on so many things. It's a demand, supply, perspective, economy, broader economy, availability of liquidity, so on and so forth. If you look at us as a group, our share price is probably among one of the highest in the peers, right? Now, we have one of the highest book values. What do shareholders look at? If you are a speculator, might look at a short-term gain. We are not in the business of speculation here, and also we are not in the business of managing our share prices. We are in the business of managing this business very well, managing this business ethically, efficiently, and producing a reasonable return for all the stakeholders. And mind you, I'm talking about consistency. It's not about just growth 1 year and then you have another problem. How many of our peers are able to match what we are doing? So I'm saying merely growth does not equal to increase in the share price. We have seen companies growing by 30 and 40%. The share price has probably even fallen even then. So Joyce, I think there's in my opinion, there's no direct correlation between your growth and in the share price. I hope you take my point.
Yeah, but I definitely take your point. But it's not about the speculation. And probably this year it's 23%. But at the same time, if we look at a longer horizon also, 5 years, 10 years, your average wealth restriction is almost 8%. And that's a dividend yield that is created above, that is provided by the company. So the point is, on a longer term horizon or on a midterm or on a short term, there is no wealth creation that has happened. Primarily,
no, I don't agree with that, because you trade 5,000 shares and the price can come up and down. You know how skewed the markets are, and there's very little liquidity going all around, right? So don't go merely by, like I said, we are not in the business of speculation. We don't sit down here and say, oh, my share price should grow by 25%. That's never there on our drawing board at all. Zero. Right?
but don't you see the need for it? Because
no, I don't see the need.
As a management,
I don't see the need for it. I see the need for very clear, efficient, ethical management, reasonable growth in line with the GDP or higher, maintaining your framework of quality, and making sure that the ultimate stakeholder, the shareholders, are rewarded properly. At the end of the day, 30% of shareholding is by the pension funds, and I think a regular income flow is certainly important for a lot of people. Now, last year, for example, we paid 14% dividend. Do you think that dividend was adequate? Okay, let's look at the other players here, say the banks. How many banks managed to pay 14% dividend last year, Mr. Matthew? Excepting Bank Muscat, nobody else. So we were the second. If you take the banks and Omaniya, we were the second highest dividend payer, and consistently. It's not just one time. What do you have to say about that?
my point is about the total return. It's that the company is giving.
The total return in this market, you cannot simply say that I'll buy and share and then I'll make some profit on selling. No, we are not into this business of speculation here.
Okay. I'm not going to argue that, even though I have a different point of view on that.
Sure, okay.
But just another aspect that I would like to get an idea about is about the first question. How do you see the demand for credit from the prime and prime plus segment that you are catering to?
The demand
and-
is quite demand is there. It is a subdued demand. Also, if you see in that segment, the competition is very high, right? And in that segment also, the demand gets driven by the price. And unless you are very, very competitive, like I said, we lend sometimes at a rate lower than what our peers in the leasing industry borrow. And that's a public figure. You see at what rate of interest they're borrowing on their bonds, perpetual bonds, etc. Right? In my presentation, I talked about our yield is about 7.7%. I'm sure some of them pay maybe even higher rate or around that rate for borrowing, right? So the demand is subdued, demand is there. We have logged in some more new customers. We are focusing now mostly on oil and gas and tourism. These are the two growth areas that we have seen. Oil and gas is another growth area that you have seen. Alternate energy investments, and we are looking at that, right? We are also focusing a little bit on the mining sector now. We believe that mining sector will soon come off the edge, and it looks quite promising. But our bottom line is that we will continue to safeguard the shareholders' money because we are merely custodians.
Okay, got it. And how do you see the quality of those credit? Because this quarter, I'm seeing a little uptick in your NPL ratios. So is it one of the reason that your growth also has been stalled? Are you very much afraid about a resurgence of delinquencies in the system?
No, I don't really see that, because many times what happens is that there's some restructuring has to be done, reporting has to be done based on the regulations, and so though those accounts may be performing well, but if they have been restructured because they either been as a syndicate of lenders, they have been sold to a new company, though it is performing well, it appears as restructured. So we don't have any concern on that. Currently, as I said, we have 433% provision cover. So that is something that would not really bother me at all, because we're constantly focused on that. You have any other question, Mr. Matthew?
No, I'm done with this. Thank you very much.
You're welcome.
Bob, if there are no other questions, I think maybe we need to just remind the people we still have a little bit of time if somebody wants to ask a question.
Yeah, somebody raised the hand. Mr. Mohammed?
Yes, can you guys hear me?
Yes, go ahead.
Okay, first of all, good afternoon. Thank you so much for the presentation. My first question is, can we perhaps get some more insight on your provision coverage ratio and the fact that it's substantially higher than your peers?
Currently, as of June 2025, our provision cover is 434%. Right? Now, it's 434% because whatever provisions are made under IFRS system, right? Those provisions continue to remain in the books. Only the new provisions don't get created. Since our NPLs are, as of now, it is only about 4 million. As of June, they were 4.7 million. Now the provision cover is high because our NPL is 4 million. You have our peers, their NPLs is 85 million, 63 million, 43 million, 18 million, and so on. So because of the historical low bad loans that we have, we don't, and the original provisions that were there continue. So there's no need to substantially make new provisions. I hope that throws some light on it.
Yes,
Go
thank
ahead.
you very. Yeah,
You're welcome.
thank you.
The next question,
And then
please.
my second question is, provided the consolidation that is happening in the banking sector, do you
Yeah.
guys expect a similar trend in the leasing sector as well?
You see, I think, there is a lot of rationale for mergers and acquisitions because they bring what you call more efficiency. They bring what you call the size, advantage of size, cost rationalization, and so on and so forth. If there is any such thing, I'm sure our board is quite positioned to have a look at and consider and take a view. And if any such thing comes to, we'll also disclose it to market. But I can certainly feel that, yes, there is a way forward on the mergers.
All right, got it. Thank you so much.
You're welcome. You're welcome. You're going to follow.
There is no question.
Okay, gentlemen. I see here Mr. Pankaj. Do you have any questions to Mr. Pankaj Nakade?
No.
You know, okay. And we also have somebody here as Apple 18. So, gentlemen, if you don't have any further questions, anybody coming up with any question, or with your kind permission, we would like to close this session.
Thank you for your presentation. So there's some chat is there. So Assalamu alaikum. Thank you for this presentation. This is Alam from Obar Capital. My question, there's one question. The net profit of H1 2025 increased marginally to OMR 1.689 million from OMR 1.653. What are the primary factors contributing to this modest growth? This question is from
Okay.
Harthi.
So basically, I think the modest growth has come from two factors. Number one has been a marginal growth in the assets, as well as I think our provisioning level has been lower because the provisioning level depends upon the quality of the book and its performance. So the first H1 provisioning is level, assets are up by about 2 million. expenses are a little lower. That's why we've been able to post a modest growth of 2%.
And sir, there is one more
Yes.
question there. Was the decrease in finance costs from OM at 3.62 to OM at 5.052 due to lower borrowing levels, reduced rates, or refinancing?
So I think it's a multiple thing. One thing, of course, we have been able to negotiate better, and we have seen some softening of the interest rates, as well as our borrowings have reduced by about 4 million.
So there is one more question asked by one of the
Yeah.
shareholder. Are there plans to expand into new asset classes or financing products beyond the current portfolio?
Yes, that really depends upon the permissions that are granted by Central Bank of Oman. We have to operate within the license that is granted by them. We will certainly look at things like housing finance, etc. And then we'll explore the possibilities with our regulator, Central Bank of Oman.
Yes, thank you for taking my question and all the best.
Thank you. Any other questions on the chat, Manish?
No, sir, these were the
No?
only.
We have. All right, gentlemen. Thank you very much. And we'll now, with your kind permission, close this session. Thank you.
Thank you, everybody.
Thank you.